The broadcast is now starting. All attendees are in listen-only mode.
All right, good afternoon, everyone. It is September 19th. It's almost 1 o'clock Chicago, and it's another episode of CFRN Thursday where we go over the CFRN trade setup, but in slow motion. So those guys that are brand new, this is going to be a great syllabus or a cheat sheet you can lean on before going into the training room. Remember, the trial is about 5 days long. So what I've seen over the years is on day one, people pile into the room and they'll see what Michael's doing, and after a day session, they'll scratch their head and go, what's going on? What's all these squiggly lines? I see this guy putting trades on, taking them off, talking about divergence, MA1, BBC, and they just get confused. Is what ends up happening. My attempt is just to spend an hour every Thursday breaking down the trade setup, and that's what you're looking at right now. This is what Michael is going over in the room every single morning. He's not slowing it down and breaking it down like this, but this is the trade setup he's using. So he's putting trades on and taking them off based on this typical trade setup, slingshot setup that's been around from day one. Okay, so my goal was, hey, for you guys that are brand new, hang out with me for an hour, so when you go take that trial, at least maybe you can absorb what's going on. Okay, you'll hear some of those same buzzwords. You'll know the setup. You might know why he's calling out some of the highs and lows, why he's moving his stop up. The idea is to give you an eyes wide open approach, so at the end of the trial, when you get an offering from CFRN, you'll say, hey, maybe I can do this. Maybe this is what I want to do. Sign me up. So that's the goal for you guys that are brand new. Not only will we go into that, we'll look at that same setup, and we'll jump into a live market, and we'll look for the same opportunities. So we will be looking to get inside the market. I'm going to get inside this tower here. This is where we do all our buying and selling. So when I'm left clicking in the green, we want the market to go up. That's how we make our money. And when I left click in the red, we'll be looking for the market to go down, and that's how we make our money on the short side. Okay. So what I'm going to do is I'm going to go inside the DOM. That's called short for depth of market. And we'll put trades on. I'll show you how to manage a trade. In other words, how to trail the stop. And I'll let you know when to exit. And it's all going to be based on these 4 set of rules. Okay, these rules that I just outlined. There's 3 of them, but there's probably 4 there. Okay, so that's the game plan. The guys that are CFRN members that are hanging out, that's cool. I appreciate that, and I like you guys hanging out too. You guys this is an opportunity for you to ask questions. For you guys, I'm going to go over some of the traps that people kind of fall into. Okay, if they're spinning the wheels, or they're having trouble, or they're not running on all cylinders. I've been in the room since day one, so I know the setup, and I've seen enough screenshots and charts and screen shares to kind of highlight, hey, this is the trap you're falling into. This is the things you have to look out for and watch for this and that. So my idea for you guys is to share some of that experience with you, so you don't fall into those traps. And then hopefully we've answered all your questions, and you're having confidence to get back on track and push the buttons again. Because I know after a while you'll lose confidence, and you're just going to say, no, I don't like this new toy. You're going to throw it away and then go find the next guru. And then you'll end up spinning your wheels with that guy, and then you're just going to go into this wheel where you're just totally confused, not know where to go and who to trust. So I've seen that over 25 years. So let me put this down, shut that down. My phones might buzz. I'll just let you know. So I just hit the silence button there. But if my phone rings, I'll have to put you on hold and pick up some lines. So I'm not being rude, just giving you advance warning. Okay. So that's kind of the game plan this afternoon. Now, before I present, I do have to go over the disclaimers. So again, I don't like to just throw them up there, tell you to take a few minutes to look at them. For the new guys, I will take 5 or 10 minutes to go over it because, this is an eyes wide open approach, and it starts with this, and that's the risk that's involved in trading. I know it's not a great way to start a webinar, but the fact of the matter is I've been around too long, and I really have seen the good, the bad, and the ugly when it comes to trading. And the disclaimer really is meant for the guys that are brand new. Okay, like I said earlier, a lot of the guys that get to the CFRN table, they've already been to a few gurus and a few trade rooms and traders and stuff like that. So they're kind of numb to this. All right, they're wounded and they've been through the fight. So, this isn't really for them. It's the guys that are new. Okay, and basically, this says, look, you can lose everything and some in your trading account if you don't have a trading plan. You're not using stop losses. If you're not engaged in the market, you're not engaged in what your trading account is doing. If you're not in tune with what's going on as far as news, what's the news that's available, that's out there. All right, so if you turn your back to all that stuff, this disclaimer is going to hit you right smack dab in the gut. Okay, so that's why I talk about it. Okay, because you all get hypnotized by how much you can make, and this guy's making this and that, and you get kind of hypnotized by the prize, but you ignore some of the risk that's associated with it. And it's a leverage game. It can be great if you're on the right side, but can really hurt if you're dead wrong. Okay. The flip side of that, because I know that's kind of not a great way to start this webinar, but the flip side of it is, if you go down the CFRN path, well, you're going to have a trading plan, right? You have 4 set of rules here. So it kind of checks that box. Every trade has a stop loss attached to it. Checks that box. You're going to be on a 4-tick range chart. So you really have to be engaged in the marketplace, right? You're going to have to be in front of the screens, and you're going to have to be watching for the setup. So check that box. And then you're going to be using aggressive risk management. You're not going to be trading around news reports. So again, also checks that box. So the bottom line is, okay, yes, this game could be real scary. Okay, if you don't have a plan. Okay, and that's what I'm saying. If you go down the CFRN path and decide, hey, this is what I want to do, you're going to have a plan. Does it eliminate it 100%? No. Okay, because past performance isn't necessarily indicative of future results, because I have to talk about that too. But at least you're doing all the right things, all right? So you don't become a casualty, and this disclaimer doesn't hit you right in the gut, all right? So that's why I talk about it. And the other fact should be talked about is, the funds that you're putting in a trading account to be funds that you can afford to lose. I know you don't want to lose, and everyone hates to lose. But if something silly does happen and it wipes out the account, it's not going to change your lifestyle. Okay, so that's what that means. Okay, and again, I don't like to just throw it up there. I do like to talk about it. So the next slide is my relationship with CFRN. I am Bert from Daniels Trading. That's who I am. Okay. I support the DtPro Trading platform. That's what you're looking at now. The indicator set is built inside the platform. Okay, so basically with a few left clicks, you can add all the indicators on there. Okay, there's basically the slingshot, the CF_CFRN, and the dynamic support and resistance. There's only 3 or 4 that you really need. Okay, so like I said, with a few left clicks, you can have them activated and enabled. Real easy. Okay, so I support the platform. It's the same platform that Michael uses in the training room. It's the same platform that Dwayne is using. And so in the end, if you are going to take a trial and you don't have access to a platform, you can request a demo with the indicator set while you're on the trial. So if you have trouble downloading it or getting the indicators on, you're going to call me at the trade desk. Okay. So, if we have to do a screen share, like a one-on-one GoToWebinar to get you up and running, we'll do that too. But the idea is, if you need help, you got someone to call, and that's a big deal. Okay, especially if you're learning, a new method, you're going to spend some money on it. You're really going to want to test drive what's going on, right? So at least you have someone as backup. And I know the setup, so if you have questions about the setup, or want to talk about it, or my experiences with it, it's fair game. Just ask. I also, ultimately, if you end up going down the CFRN path, at some point you'll have to open up a brokerage account. I represent that too. So the bottom line is, let me get back to this, is that CFRN, okay, they don't work for Daniel's Trading, and Bert doesn't work for CFRN, okay. There is a fine line, thick line in between us, okay. There's no commingling of anything. There can't be. It's a compliance issue, okay. So what this says is, look, at CFRN, they're a third party. It's their indicators. Okay, it's their software, their trading tool. They're the educator. Okay. Anything on their website that you're having problems with, you'll contact them. If you decide, hey, I'm going to go down the CFRN path, any exchange of money, that's between you and them. Okay, it doesn't go to Bert, then to them. No, it's between you and them. Anything with the workshops, Thursday night workshops, videos, the members area, any issues, you'd reach out to them directly. If it's about logic, okay, you're looking at the Logic 247 product, can reach out to them for that. What's fair game is, in the afternoon, Dwayne is on the radio. In the afternoon, Michael might be running around. Okay, so what a lot of people do, they'll call me and say, look, I'm trying to get a hold of Mike or Dwayne. Can you let them know I'm looking for them? Have them give me a call. That's fair game. I can always text one of them to say, hey, do me a favor, call Bart. Let him know that, he wants a phone call. So if you run into that situation, that's all good. Okay, so that's fair game. And like I said, I've been around, so I know the setup. So if you want to ask me, that's fine. Ask me. Raise your hand. I'm happy to do it. Okay, we can spend some time together trying to work out any kinks that you have. Okay. So that's it. That's a disclaimer part of it. So now you do this. Let me get rid of that. Stay in demo mode. Okay, so I don't push any buttons and that I don't want to, and go into freak out mode. So so the next step is, especially for the new guys, we're going to go over the trade setup. So let me get the marker out again. And the first order of business is the time frame. We are on a 4-tick range chart. Okay, so if you have DtPro, how the heck do you get there? Chances are you're on a 30-minute chart. You might be on a daily chart. You know, if you're following logic, you're going to either be on the 30-minute chart, right, or the 5-minute chart. Okay. The idea is inside the training room from 8:30 to 10:30, you're going to be on a 4-tick range. So what you want to do is the upper left-hand corner here, where I'm moving my mouse, little drop-down box there. Left-click on it, and then go down to custom, and then this box will open up, and you want to select a range bar. Okay. Make that one look like a 4. And you're staring at the SEP E-mini on a 4-tick range. Okay.
Because of 2000.
The advantage of a few things about the 4-tick range. Number one, the height of each candle is 4 ticks in height. Okay, no matter how small or big they look, it's always 4 ticks in height. Okay, so why is that important to you? In the morning, Michael is going to start calling out some highs and the lows, okay, of then the current candle. So we might be staring at the screen and we're looking at this candle. So all of a sudden you'll start hearing Mike call out the highs and lows of this candle. What he's doing is he's preparing himself, he's preparing to place an order. He's doing it in advance. Okay, he's being proactive. So here's what he's doing. The current market price is right about here at 30.15. What he's going to end up doing is place a buy stop above the market price or place a sell stop below the market price. Okay, just depends on whether it's a bullish or bearish setup. Okay, so if we were staring at this right here, okay, this would be more of a bullish setup. So he would be placing a buy stop above the market price. And the idea is, as long as the rules apply, okay, we're going to go over the rules shortly, okay, he will place an order. So if the market takes off, okay, the market's going to enter him, it's going to enter a position in on a stop. He's going to enter on a stop. If it's a bearish setup, the same thing. He's just going to place a sell stop below the market. And if the market breaks down, well, he'll get stopped into the position, so he'll be short. And if the market has, you know, some kind of crazy, goes into a crazy tailspin, he's going to take advantage of it. Okay, so you're going to hear that in the morning, and that's why we talk about it right now. Because when he does talk about it, or you rewind the tape and go, how the heck did he get into this trade? This is how he's doing it. He's getting in on a stop, or he's selling it on a stop. Okay, so that's a scoop on that. That's why he's doing it. So the 4-tick range allows him to be proactive. Okay, so not all the time. You know, if it does qualify, he can left click and get in here, or left click and get on the short side, or he could be, like I said, proactive, where he buys above or he sells below. Okay, 2 ways to do it. Okay, so the time frame. That was a long-winded explanation of the time frame. Okay, so we're on a 4-tick range. That's the bottom line. Okay, now the setup. We're going to work on this portion of the chart here, the top portion. So this red and blue line is referred to as the MA1. Okay, nothing fancy about it. It's called the MA1. Okay, green line. You hit the eraser. The green line is referred to as the BBC. That is short for the bullish and bearish cross. That kind of leads us into step number one, which is this. Okay, together, the MA1 and the BBC make up this step here, which is this. If the MA1 is red, I'm crossing the BBC. Okay, that red line is crossing the green line. That's a bearish cross. If the MA1 is blue, I'm crossing the BBC right here. That's a bullish cross. Okay. The one that's highlighted here is called a bearish cross. Why? Because the MA1 is red. Okay. That's step number one. Now take note, I didn't say this. I didn't say get short, get long, get short. What we're looking for is after that first initial step one or the cross, okay, we're looking for bullish and bearish opportunities after the cross. Okay, we're not getting short, we're not getting long, we're not getting short. But after the cross, what we're looking for is the market to actually do the normal thing. It's after the cross, at some point, the market is going to gravitate toward the green line or the BBC. Okay, it's going to gravitate toward that green line. So not only are we looking for that movement toward the green line, we're also looking for a touch of it, but then a close in the direction of the trend. That's what we're looking for. Okay? A close in the direction of the trend, okay, would look something like this. That candle there. Okay, so if we're looking, we have a bearish cross or a red MA1, you should be looking for a red candle. Okay, if we get a bullish cross, okay, where the, see if I can't find one real quick. If we get a bullish cross, right, where the MA1 is blue and crossing the BBC, then we're looking for buying opportunities. The normal thing for the market to do is to gravitate toward that green line. Okay, so what we're looking for, okay, is for the market to challenge the green line and then give us a green or blue candle. That's what we're looking for. Okay, two scenarios. Either we're going to be buying or selling, okay, after the cross. But that step one lights the match. Okay, that tells us what direction we're looking at. So that the one that's outlined here is a bearish cross. Okay, so we're looking for the normal thing, the market to get up to the BBC, touch it, and then close in the direction of the trend. So that's step number two. Step one's here, step two is right here. Okay, so a big question I always get, and I already see it here as well, why don't you just place an order right here? Okay, get short. Why wait for the down close? Okay, and you miss out on a few ticks. Here's what might happen. The market just might just blast right through the BBC and take off. Okay, so what you end up doing is you end up avoiding a potential stop loss. Okay, so you're sacrificing price for action with that down close. Okay, so that's why we're looking for that extra. We're looking for that red candle. It's another sign that says, you know what? Maybe the market is doing the normal thing. It's getting up to the green line and it's failing. I should take note of that. Okay, that's what you're doing. Okay, so that's why we don't place the order right here. Okay, because we want that market to show us a little bit more, tip its hand. Okay, so step one and step two are covered. So now our eyes after that, that's step two, our eyes gravitate toward the oscillator portion of the chart, or what is known as the slingshot. Okay, so some buzzwords here. The red and blue line is referred to as the cycle. And the green line, well, nothing fancy about it. It's just the green line. Okay. The space that's in between the green line and the cycle, okay, which is highlighted by that yellow arrow, is referred to as the divergence or separation that Michael is talking about in the morning. Okay. That's what you're looking for. All right. The CFRN trade setup exists down here in the slingshot, and I'm going to tell you why. Okay. Let me get my pen out. I'm going to break this down so it's better to understand. Okay. What this is saying here, this cycle, it's red. We just said, hey, a red MA1 is a bearish cross, so we're looking for the market to go down, right? Well, this is also saying, look, the cycle is red, it's the same color, and it's got a good slope to it, saying, look, momentum on this NASDAQ on the 4-tick range, the momentum is bearish. Okay, it's bearish because the cycle is red and it's got a good slope to it. Okay, the little pop up here, the normal thing for the market to do, with the green line pulling away from the cycle, what it's suggesting is this is just a pop up in this ongoing downtrend. That's what it's saying. Okay, and that separation, or the divergence that Michael was referring to, is that slingshot. Okay, like pulling the rubber band back, the slingshot, saying, look, and this is just a pullback. And what we expect to happen is this green line to pull away from the slingshot or the cycle, and then ultimately snap back and get it back into the cycle right here, close the gap. Okay, and what we expect to happen on top, price action will follow along and make a new pivot low. So when this guy in the green line touches the cycle down below, the market up here should be making a new low, and it's at this point here, okay, is where we close out the trade. All right, so why do we do that? Because here's the normal thing that's supposed to happen inside the slingshot. Okay, this is telling us get short, right? We expect the green line to pull away, close the gap, pull away, close the gap, pull away, close the gap, until the cycle gets bullish. We have a blue cycle, and then the green line pulls away, closes the gap, pulls away, closes the gap. Okay? So what we end up doing is selling this rally, selling this rally, selling this rally, buying this dip, and buying this dip. Okay? And when the green line closes the gap, you close it out, close it out, close it out, take profit here, take profit here. So that's why the trade exists down here in the slingshot. Okay? We're just taking advantage of the little air pockets in the market. Okay? So that's a scoop. So in the end, okay, if you go down this path, you're not learning to pick the top or the bottom and trading it from point A to point C. You're actually learning to take a piece out of the middle. Okay, right here. That's the piece you're taking. And along the way, you're going to be trailing the stop, trailing the stop, trailing the stop, trailing the stop, until guess what? That green line gets into the cycle, all right, and closes the gap. And that's where you're going to close it out. So that's the game plan. So you're basically taking a piece out of the middle, and you're going to be scalping the market because you're going to have 4-tick range chart. And you're using aggressive risk management. So that means you're going to have to be in front of the screens, looking at a set of rules. You're going to have some discipline to follow the rules. You're going to be using aggressive risk management, so that means potentially a lot of trades, right? So it's kind of the thing that you're signing up for, okay? And in the end, every trade has an 8-tick stop attached to it, okay? So as soon as you put the trade on, that stop goes in right behind it. So if you're trading the crude and the gold, if you're dead wrong, you're risking $80. If it's the YM, it's closer to $40. You're trading the maybe the S&P, it's $100. The S&P 500, the minis. Okay, so that's a scoop. Okay, that's the trade setup. Okay, so you're signing up to scalp. Okay, now what you don't know, because in the training room you're going to be on a 4-tick range. What you don't know, or maybe you do, is that you can take those same principles and apply them to larger time frames. I'm on a 30-minute chart. After the cross, what's the normal thing for the market to do? Pull back to the BBC. Okay. So if you are interested in scalping, that's great. You got 4 rules and you got some tools to look at. But if you have an appetite for swing trading, which is what a lot of Wayne's doing with logic here, okay, you can be on a 30-minute and you can be on a 5-minute. You can be on a time frame, okay? So you could potentially take some larger profits, okay, and take some bigger swings. Bearish cross, the MA1 is red, crossing the BBC. The normal thing for the market to do is pull back to the BBC, and we're looking for a down close. Do we have the divergence? The green line's pulling away from the red cycle. This is divergence. This is space. What do we expect the green line to do? Ultimately come down and close the gap. And in theory, the market will make a new pivot low. Okay? So you can apply it to any time frame, even dailies. Okay? Even dailies. In fact, okay, I don't know. There's soybeans. I just pulled it up randomly. The market gets a bullish cross here. The market's supposed to come down and make a new gravitate toward the BBC. You wait for the first up close. Nothing's happening here because there's no divergence. Okay, so try the S&P. We had a bearish cross here. The normal thing for the market to do is pull back to the BBC, and we're looking for a down close. Okay, do we have the separation and the divergence? Yes, we do. Well, that's a 5-minute. Stand corrected. All right, hold on, my phone's buzzing here. All right, so I'm back. All right, so the point is larger time frames, also the 4-tick range. Okay. All right, so let's go looking around and see what we can do. Okay. So let me go back to this diagram here. Okay. If there's something, there's one thing you want to do. Okay. First thing we do, as soon as we get these bearish and bullish crosses like we have here, the number one thing that you should be looking for, okay, before you establish a long or short opportunity, before you get long or short, the market needs to be trending. All right, so that should be the first thing on your piece of paper. Okay, you better have a trend. Okay, so if we get a bearish cross here or here, the market better be making lower lows. Okay, or if we get a bullish cross, the market better be making higher highs. Okay, if it isn't, okay, if we have this sideways action here, okay, we're not going to take any action. You're not going to push any buttons. The market needs to be trending. Okay, that's number one. If not, okay, we don't do anything. Call back, Paul. Call back in about an hour. All right, so let's establish that. Market needs to be trending. All right, so that's what we're going to do first before we go through our set of rules. Okay, so I'm on the ES 4-tick range. Okay, now the next thing what I want you to do is I want you to get in the habit of hitting the zoom out button, because a lot of times what you'll do is you'll get distracted. You're looking at Michael's charts. You're looking at floating charts that are pretty much blown up pretty good, like you're looking at the market under a microscope, and you're not seeing the full landscape of the market. So what you're looking at here might be trending action, but if you hit the zoom out button, okay, you might find out, you know what, no, we're just spanning the triangle, and maybe we're just in a larger sideways chop session. All right, so if you hit the zoom out button okay, you'll get to see what's happening over here. Okay, so that's a big deal. So for the moment, okay, let's break down some of the things that are easy and obvious. Number one, we have a bullish cross here, right? That's step number one. The MA1 is blue and crossing the BBC. The green line is the BBC. So we're looking for bullish opportunities, right? So now we're looking for step number two. Step number two is the normal thing for the market to do is to gravitate toward the green line or the BBC. All right. So let's dig into step number two a little deeper, okay? Sometimes you're going to run into a situation where the market has so much bullish or bearish momentum, it will not get to the BBC. Okay, here's a good example of it right here. Okay, it doesn't get there and it takes off. Okay, so here's what you're going to end up doing. Okay, as soon as you get this cross, whether it's a bearish cross here or a bullish cross here, the next order of business is to activate that trend line. All you have to do is left click. Okay, notice my mouse now has turned into a crosshair. That's when you know you activated the trend line. You're going to activate that because you're going to get in the habit of drawing trend lines. Okay, why? Well, we don't know if this market's ultimately going to do the normal thing and get back to the green line, correct? If it doesn't, and you're doing this correctly and you're being proactive and you're drawing your trend line as it approaches that green line, okay, if we get a close above or below the trend line, in this case it would be above, okay, and we have this bullish separation below, okay, there's action to take. That is a buy, okay, right here. Okay, what this is saying is, look, the momentum's bullish. This is that pullback, okay, and that ongoing uptrend, and the market has so much bullish momentum it can't do the normal thing. It's closing above the trend line. It's time to get left click and get in and get long. That's what this is saying right here, this action. Okay, so that's why after the cross we activate the trend line, because we're going to draw trend lines as they approach the BBC.
That's good. They learn.
Okay,
That's all that matters.
because we never know if we get there. The other reason why we do that, okay, we're breaking down step two a little bit further. Okay, here's another trend line. The other reason why we draw trend lines, okay, is because at some point that cycle will be blue and then all of a sudden turn red on us. Okay, what does this mean? Okay, what this means is this. When everything is the same color, we have a blue cycle, okay, we have a blue candle and up close, and we have a bullish cross, bullish candle, blue, and we have a bullish cycle here, a blue cycle. That stacks up all the probabilities in our favor. Okay, that means we have a lot of momentum. It's just a minor pullback. Okay, that stacks up all the probabilities in that corner. Okay, if that cycle turns color on us, now it's red. All right, that's kind of telling us, look, okay, probabilities are watering down a little bit. We might be rolling over here because the momentum went from bullish to bearish a little bit. Okay, so that's a warning flag. That waters down the probability. Okay, you should be on alert. Okay, to take that a step further, if the cycle turns red, okay, now we know it registers, hey, this is a warning. Okay, this is not as juicy as it was back here. But if she starts tilting over at a 45-degree angle, as she's doing right now, okay, there is no trade. That is the second disqualifier. Okay, the first one is no trend, okay? Just trading sideways, no trend. Second big one, and this is one of the big traps that people fall into, is that the cycle has turned red on them. It starts to curl over. They may get it close above it, the trend line, and they push the button anyways, okay? The result is right here is a stop out, okay? So that's one of the major traps that people fall into, okay? So beware. Now, you're going to say, and I already see the question, well, that doesn't look like a 45-degree angle. Totally agree. All right. How do you measure it? Well, you can do that and say, hey, if it kind of looks like a 45-degree angle, if you split one of the squares up, well, you can define it that way. My answer to you is, look, if it's 30, 25, if it's curling over, if it even looks like it's curling over, then don't push the button, because you're already watering the probabilities down with that anyways, right? So even if you have to ask yourself the question, then don't even take it. You're on a 4-tick range. You got about 12 different markets to look at. There's going to be plenty of other opportunities, okay? So the suggestion is look for the easy and obvious, okay? The ones where they're all the same color, okay? Everything's the same color because that's, I don't know, stacks up all the probabilities in your corner, okay? There's no other filtering, all right? When you go over here, okay, this is where the junkies are. This is where they're over trading. This is where they're looking for opportunities. This is where you fall into the traps. So, just saying, from observation, being in the room every single day, that might be something you consider, okay? And I would strongly consider. In the training room, okay, let's see if I can't find another example. As long as this cycle is flat, like it'll go blue and red, as long as it's flat, Michael will take trade setups, okay? So beware of that. But as she starts curling over, okay, that's a red flag. That means the market's going to trade sideways or potentially go down, okay? Just a warning. All right, let's go over to crude oil, okay? The first thing on our piece of paper is, are we trending? Zoom out, zoom out, zoom out. The answer is no, we're sideways, okay? If you're unsure, dynamic support and resistance dots will help you, okay? If they're side by side, a pair of choo-choo tracks here, it's really easy. It's obvious here, right? They're side by side like this, no trade, okay? So right now, crude, we're going nowhere. So we'll sit on our hands. Natural gas, the same thing, right? Zoom out a few times. Not sure. Dynamic resistance, dynamic support printing. So we're not going to take action until this market breaks out, either here or here. Then we start looking for trade setups, okay? Just an observation after the fact, which I hate doing, but because we're trying to learn a little bit here. There's the bearish cross. The MA1 is red crossing the BBC. We just said the idea is after the cross is to activate the trend line. We do that because we get in a good habit of drawing trend lines. Okay, sometimes the market has so much bullish or bearish momentum, it will not get to the green line. And in this case, it actually closes below the trend line. Okay, so right here, we have that separation. Well, we have a red cycle, so everything's the same color. So the probabilities all are in our favor, and the green line's pulling away. Okay, so there's an opportunity here to go short. After that, it actually goes to the BBC. and closes in the direction of the trend in the same candle, we still have that separation. All right, we get a reaction. The cycle's red, right? So there's an opportunity there. Okay, so that's kind of the sequence you're going through. Okay, but for the moment, sideways, so nothing to do. Now flip over to the gold, same thing. Notice how I zoom out. It's just kind of a habit, and that's a habit you'll develop over time. Notice the green support and resistance dots are side by side. Okay, and look at that low there. It's equal to that low. Okay, it's sideways. So what'll end up happening is, okay, like I said, a lot of times you'll get hypnotized by the charts that might be blown up a little bit, right? All right. This might be trending action. We get a bullish cross. We get the pullback to the BBC. We have an up close. And we don't have a lot of divergence here, okay? But in the grand scheme of things, we're really not trending, okay? So you'll avoid a lot of stop outs if you just take a few minutes to hit that zoom out button, okay? Go to the currencies. Okay, zoom out, zoom out. Okay, again, we're butting our heads up against resistance here. So we got resistance side by side. Okay, we definitely had a clear few things here. Okay, that sticks out, right? That's a bearish cross here. That's an attempt to pull back to the BBC or the green line. There we have a red cycle with a nice slope to it, some separation. Okay, we had a bullish cross here. The MA1 is blue, crossing the BBC. Another trend line being drawn here. Here we have a close above the trend line. We have a blue cycle, nice slope with the green line pulling away. Okay, there's the question is, what about the dynamic resistance? Okay, definitely. Okay, this is acting as resistance, right? And given in real time, it's a good question. If I'm staring at this and I am seeing dynamics resistance printing and I'm staring at this setup, I'm not taking it. Okay, because we got a pretty good reaction off that top there, right? So to me, that's potentially butting up our head against old resistance there. So I wouldn't touch it. There's not enough room to make any real dough. Now, if we had pulled back to the green line, yeah, there's some space between the green line and resistance, dynamic resistance. So you might consider it. Okay. So there's a point right now. Let me get rid of the trend lines. Okay, we just said, look, market's not trending, right? We did get the bearish cross here, right? MA1 is red, and we're attempting to get to the BBC right now, right? So I don't want you to do anything because this might give me an opportunity to push a button inside the DOM. But you notice my reaction was boom, draw a trend line. Okay. Do we have the separation? Well, we have a nice slope to it, so that's cool. That's good for the home team. And the green line is just defining that separation. There's not enough there, but let's see what happens because this is a chance for me potentially to get short and show you how to do it inside the DOM. And as I said earlier, what Michael does a lot of times is he's proactive, right? When all the rules apply, okay, he can place orders in advance. And what he'll end up doing is calling out the highs and the lows. Okay, so here's a good example of it right here, right now. So if the high is 26, if we know the height of each candle is going to be 4 ticks in height, then the low should be what? 24, right? So what Michael will end up doing is right-clicking, okay, or creating a stop, a sell stop, to get short if it takes out 24. Okay, high is 26, and the low must be 24. 24 will be below the trend line that we drew, so all the rules would apply. So this is a valid order. Okay, he's waiting for the market to break the trend line before he gets short. Okay, now while that's sitting, because we'll try to get short if that happens. Okay, number one, let me stay in the DOM here so it's less confusing. See the Tinker Toy triangle on top here? Got my mouse over it. Notice how I left click, the bottom of the DOM opens up. Well, this is what's known as a bracket. Okay, so if you select buy stop and sell stop, let me make sure. Okay, if you select the buy stop and sell stop, and you right click over it and put factor in ticks, right click over it, put factor in ticks, and make the factor an 8. What this will do, and this will automatically place that 8-tick stop loss that I talked about earlier. Every trade has an 8-tick stop. It'll automatically place that stop loss for you. Okay, so as soon as we get into the market, that stop will be sent to the exchange. So that's what this guy is over here. Okay. Notice if I place a new order, I'm trying to get short at 111.25. Well, my stop loss is 111.29, 8 ticks away. All right. So as soon as this gets filled, the stop loss is going to be hit. Okay. So that's the bracket order. So for each DOM that you have, one of these towers, you're going to set it up so it's only 8 ticks away. All right. So that happens, we'll try to get short. Okay. So let that sit there. So instead of us staring at this thing, just sit around. We'll go somewhere else and see if we can't find anything else to get in trouble with. There's that crude oil again. Okay. A little sloppy here with the divergence or separation, so we're going to stay away. Natural gas sideways. We'll stay in the currencies. Let's see if there's something else happening. Here's the British pound. Okay, we had the bearish cross here. It tried to do the normal thing and pull back to the BBC, right? Here's your trend line. Here's your down close. There's a little bit of separation here. Okay. Okay. There's not enough room with this close to the green dots. So we're going to skip that one. Swiss franc, bullish cross. We get a pull back to the BBC or the green line. Maybe we'll get long. Canadian, nothing unfolding here. The Mexican peso, nothing's going on there. And I'll even go to the Aussie to see it. No, nothing's going on there.
Oh, it's
all right.
It's a reset your password.
All right. Well, I think the best thing, believe it or not, might be this crazy euro that we have going on. Okay, and really that's not ideal because we don't have a big setup here. We don't have a lot of separation, right? This is the separation you're looking for, guys. Okay, this is in the beginning stages of it. Okay, but let's see if we get that red candle, and if we do, then at least I can show you how to trail the stop. So let's see. Allow me to sip some water here. Yeah, so we're looking, again, with questions being asked, we're looking to get short, okay? And that was set in motion by this bearish cross here. Okay, bearish cross. We said earlier, after the cross, we draw a trend line. That's what we do here. We do the trend line. One or two reasons. Number one, if it doesn't get to the green line, okay, this is in place. Or if the cycle turns a different color on us, then the trend line is required. But if you do this in advance, okay, if it does qualify, you're not fumbling around trying to draw a trend line after the fact, okay? You're doing it ahead of time. So if it does happen, you can go right inside the DOM and take action. Okay, it might qualify here, so let's see. Hoping it does. So we're trying to get short. Like I said, there's two ways to get short here. Number one, we're doing the proactive way. Okay, you have a sell stop here in advance in case it breaks down. Or we wait for it to qualify, in other words, produce a red candle, and then go on the DOM and left click. Okay, what are the differences? Well, if the market just goes into a tailspin, that left click motion will miss the trade. The one that we have set here, which is a sell stop, if it breaks down, we'll take full advantage of it. Okay, so you know, it just depends on how comfortable you are with moving the DOM. I thought maybe it was going to qualify, so now it's kind of I'm looking at different markets just so I can find something else. This is why I can do this in slow motion, because we're in that time frame. We're in that time frame where the market really isn't doing a lot. Okay, so that's why I can do this in slow motion. Okay. I'm just scrolling through the different markets. Well, I think we're just going to look and see if this thing qualifies. I really would like to see. In fact, I don't want you to touch any of your DOMs, all right? Don't touch a thing. All right. Here's what I did. I got short. Okay? I just did it so we can get our hands dirty with the DOM. Okay? We are short. How do I know I'm short? Well, right here it tells you you're short. A -1 up here, and your P&L might start moving. Okay? Also on the chart here, you got this nice red horizontal line that says, hey, you're short, dude. Okay? So there's about 3 or 4 spots that say, look, okay, you're in the market. All right. The other thing I would get in the habit of doing is if you go up to trading, position and order management, and go to working orders, I'd have this box open all the time. It doesn't have to be in front of the chart. It should be somewhere where you can look for it. Okay? And the reason is, this is where we're short. Okay? And I said, we created a bracket down here. Right? We did that by pushing this Tinker Toy triangle. Okay? And every trade has an 8-tick stop attached to it. Okay? Here's our stop. Okay? This green order, it's this right here. That's our stop loss. So what you're going to see Michael do is as soon as you get into a trade, okay, now it's just money management. Okay, and money management rules are as follows. If it goes +4 ticks in your favor, you move the stop to break even. What is break even? The entry price. Okay. The other rule is if it closes on the other side of the MA1, that's that buzzword. This is your red and blue line, that's your MA1. If it closes on the south side of the MA1 here, you're also going to move it down to your entry or your break even. So how do I do that? All you have to do is put your mouse over the number 1 here, left click, hold the mouse down, and drag it, release. Notice up here, the price is changing as your price changing the stop. That's all you have to do. All right. Okay. So if the market does break down here, you're going to move the stop to your entry, and your entry is right here. Okay. Pretty simple. So that's all we're doing. And what we expect to happen. So the red line is going to do one of these, right? That's cycle. And we expect the green line to pull away. And what would we expect the green line to do? At some point come down and intersect the cycle, or they kind of close the gap. And in doing so, the British pound will make a new pivot low. And when these two guys meet, it's time to get out of the trade. Does it happen that smoothly? Absolutely not. Case in point here. Looks like everything's going smooth, and then whoop, about face. All right. This is why we trail stops. Okay. Because we expect this, and then if it doesn't about face, then we're out of the trade before it does that about face. Okay. So that's what we're looking for the British pound to do, or the euro. Excuse me, the euro. So unfortunately, it's kind of watching paint dry. So at the end of the trade, or even when you close out a trade or you close out the platform, this is your working orders tab. This thing should be blank. Should be nothing in there. Okay. So if you think you're out of the market, you may be flat the market. You might have no position. But if you have something in here, you have something working, something live. So if the market does something and you forget about it, you could potentially have risk on the table and you don't even know it. Okay? So that's why I'm advertising this box should be open or put somewhere. Minimize it, but you should reference this box so you know. Okay, hey, let me just make sure I have nothing working.
Okay.
Okay.
What's the account number?
So that's what I would do. If that's what I would do. That's what you should be doing.
38568.
All right, so we're just waiting there. Let's we only got 5 minutes. What the? All right.
Walker.
Look around. Crude oil.
When I'm looking at.
Nope, I don't think we're necessarily trending here. Again, this says higher highs.
So what's
Okay.
the question or what's the issue?
That should have been your trend line off to the cross. That is the close above the trend line. Not a lot of room between here and dynamic resistance. Plus, you didn't have a lot of space there, right? So that's not real juicy. Okay. So it does look like it's trending, right? We got net. Get that marker out. Okay, we got this going on, right? Again, Bert told us to zoom out, and now we're putting our head against resistance over here. We did have a pretty good reaction off that level, so I'd be very cautious. Okay, that's not that easy and obvious setup that I would be looking for. Okay, and you know what? That might be a missed opportunity, and that'd be something that you point the finger to at me and say, hey, he told me not to do this, which is fine, but I'm telling you, this is the trap that people will fall into. Okay, so be careful. All right, let's go look on our euro. Okay, well, we got 1 point in. So here, watch this. I'm going to drag the stop, move it to our entry. Okay, so that's where it is. So we have no risk on the table.
Is that what he's trying to do?
Okay, so that's what you're doing. Now let's go somewhere else. Let's go find something else to get in trouble with.
So
The S&P is sideways here for the moment, so we won't monkey around with that. Just check out the gold just in case it decided to break out. It didn't. Okay, and notice I zoom out just a few. Okay, after a while, you're not even going to have to be able to. You won't even have to zoom out. You'll see it right away. It'll just click. Okay, that comes with screen time. That's why you're here this afternoon.
okay, that's fine. I'm going to switch it back to normal. No, no. What's it under?
What's the potential setup here? Okay, so we're just stopped out. Okay.
Okay, all right.
Not surprising because, like I said, there's not much going on. Okay. And like I said,
Okay.
it looks like we're chopped up inside of a smaller, bigger trend. We're just sideways here. So it's not surprising. Okay. So, really kind of boring because we didn't have a lot of market action. But some of the things that you can take away from this is, number one, trending. Okay. Get in the habit of hitting the zoom out button. Okay. That will save you on some potential stop losses. And if you're not sure if you're trending, then don't push any buttons. Number two, get in the habit after the cross. Okay. What does that mean? The guys that are brand new, after the bearish or the bullish cross, I want you to get in the habit of hitting that trend line button. Because in the morning, you're going to see a lot of trend lines being drawn. And that is a habit you want to get into. Okay. Because we do that because we don't know if it'll get back to the green line or the cycle might turn color on us, and then the trend line is required. But if you're drawn in advance and it happens in real time, hey, you're in a position just to flip over to the DOM, okay, and take action. So that you might not miss out on an opportunity. So if you get in the habit of being proactive and drawing trend lines, it's a great habit. Okay. All right. And the other thing is, like I said, let's see if I can't find a good example of the other trap. Hold on. Of course, I won't be able to find it. Here's a good example. Is as the cycle turns red, right? The trend is down, which is great. But as she starts turning color, and then she starts tilting up at a 45-degree angle, right here, that would be a trap that people would fall into. Okay? The results are usually market trade sideways, or it actually will go against you. So you will potentially avoid a stop out. Okay? This means you would be swimming against the tide, and that's not what you want to do. The idea is to have everything the same color. Okay? Same color with a nice slope after the cross. That's what you're looking for right there. Okay?
Yeah, that's pretty much.
That's the scenario. All right. So we spent an hour doing this. There wasn't much market action, but there was a few things to talk about. I recorded it, so if some guys had to go and they came back, so it's recorded. It'll be out on YouTube, so you can make reference to it. The new guys, here's your syllabus. Okay, guys that are CFRN members, I talked about some of the traps you fell into, that people fall into, so take note of those. And we'll do this every Thursday, and I'm going to hammer over the same points over and over and over again. And it's been recorded, and I'll see you in the training room in the morning. Okay?
It was a huge